allow me to start off with a couple of pieces of news, and please don't shoot the messenger on the first one. Now, you probably already know this, but maybe you've been holed up someplace all day and haven't seen the stock market. But Tesla is down strongly. Last time I looked, down 12.5 points on the day. And then the other piece of news that you may or may not be aware of, this one's more likely that you are not, is that Elon Musk has finally gotten together with Lex Fridman. And that is on X right now. I don't know if it's on YouTube yet or not, or whether it's on his podcast, but it's definitely on X. I've listened to about the first 40 minutes of it, and I'm going to enjoy the entire thing. And I will report on my findings tomorrow at about this same time, middle of the day. All right. So what I do want to talk to you about is why Tesla is down 12 points. And I think it's kind of crazy that it's down 12 points. I think that it's down maybe 4 to 6, maybe half of those points. It's due to the macro being down today. The 30-year bond issue did not go well today. It was a little hard sledding, and I've never seen such a sharp drop. I'm sure I have, but it seems like I've never seen like a straight line drop on the NASDAQ, the S&P, the Dow, and basically all of the stocks had this massive drop off right after the 30-year bonds did not sell well. That drop has been capitulated. It's come back a little bit since then, but that really took the entire market to the cleaners today. After being up, of course, for 7 days in a row, it looks to me like it's not going to finish in the green today. And so I would say half of the drop, 6 points of this 12-point drop is probably that. The other 6 points has to do with Mike Tyndall of HSBC coming out with his initial rating on Tesla stock. And the headlines were brutal. And as you'll see, folks could have had different headlines out of what they came up with. And I'm going to suggest at least a half a dozen. I forget. I think I've got 7 different points here, maybe 8 different points. And we're going to talk about these different points. There's a lot of wheat here, actually some good stuff from this particular letter, I guess, this letter put out by HSBC. But there's also a lot of chaff to go with the wheat. And I think over time, over a day, 2, 3, 4 days, this one will be completely forgotten, except maybe for the good stuff, because thousands of people will be reading my version of it and saying, "Oh, I get it now." This is Randy Kirk. Hit like, hit subscribe, hit notify. Let's see, we got the regular show coming up tonight where we now mirror the morning show. So if you'd like to hear what's going on in the pre-market, what's happened in terms of Tesla news all day long, there might even be a little bit about the Fridman discussion with Elon, in tonight's show, maybe a little bit in tomorrow morning show, but then I'll do a complete show on it around noon tomorrow. And then, of course, on Friday night, I've got Larry Goldberg coming back with me, as usual, on Friday night to discuss the entire week and how we looked at what took place. And then, of course, you want to buy your Cybertruck. Thank you so much. The orders are coming in nicely now. If you want to get your Cybertruck, they're $25 for one. And can you say it in unison now? Can we all say it together? $45 for two, $65 for three. Anyway, so all the information's down below. You send the money to paypal.me/Randy Kirk. It's all in lowercase letters. Or you can get one for free by joining my Patreon. And thank you again, another member this morning joining Patreon. I appreciate all of you supporting the channel. All right, let's dig into this. It would be very easy to look at Mike Tyndall. He's an automotive market guy. Some people are like, he's probably in cahoots with all his automotive buddies in the ICE game. It'd be easy to dismiss him as a seriously not very good analyst who only has a 2-star rating out of 5. He's currently performing at number 5,574 out of 8,600 street analysts. So he's kind of in the middle. His 47% success rate, not great. His average return of negative 1.3%. And the fact that only 16 of his 34 ratings made a profit. These would all be of concern, and it might cause you to go, maybe we should discount the things that he's saying. So what I think happened this morning is that a lot of folks who sold off Tesla today didn't take the time to look at tip ranks. Of course they didn't. They didn't even take time to really read the articles. well, maybe they read one article, which didn't even have everything that was important about the letter, but maybe they just read the headline. And of course, there was this knee-jerk reaction. They looked at HSBC as a credible resource and made this snap decision. And some of those people were already on the fence and thinking, the whole, BEVs are down, and, is it going to come back? And Elon is always talking all this, and so maybe, and then there's a group of them, they bought it at 100 and they're sitting at 215 or 212 and it's going down. It's like, okay, time to grab profits. And then there's a bunch of people that bought at 250 or 290 and they're going, I don't know. I thought, you know what? NVIDIA looks like it's going to be going up. Maybe it's time for me to switch out. Anyway, maybe buy some bonds. I mean, all kinds of possibilities here, but there could have been a lot of people on the fence that just went, okay, this is the time. Some read beyond the headlines. I read every article since this morning. I had only read one article. Okay, this morning I read one article. I already posted comments. I already talked about the findings this morning. Now I've read about 10 articles. I've read posts on X about it. I've looked at comments that came along with some of those articles. I've thought long and hard about it. And now I've got these 7, I think there are points. I suggest you stay to the end. Like the thing I did yesterday on Trueflation, that was important. And if you haven't listened to it, you should. And you should stay to the end for this as well, because this is really good stuff if you dig into it and take a look at it a lot closer than even Tyndall did. All right. So let's start with number 1. Mike Tyndall believes that FSD, RoboTaxi, Optimus, and Dojo will all be contributing revenue and profits by 2030. Now, that wasn't in the headline. This is an automotive guy. Okay, we know he's an automotive guy. We know now that he thinks all 3 of these are going to be in profits by 2030. That should have been part of the story, but it's not part of the story. If somebody looks deep enough, that's the story. The analyst, it says, according to the article, the analyst worked with the assumption that full self-driving, Tesla's suite of advanced driver assistance systems for urban driving, it's not for urban driving, it's for driving anywhere, the Dojo in the world, the Dojo supercomputer, and the Optimus robot all become successful by the end of the decade. Now, if you watched my video this morning, if you watched my video about 2 or 3 weeks ago, I talked about my belief that Optimus and FSD RoboTaxi are going to be successful by 2026. I don't have an opinion on Dojo yet because Elon hasn't said that it's going to be a thing yet, whether it's going to be a service product or not, or just an internal thing that they use. I think it's going to probably be a service, but I'm waiting for Elon to say, oh no, we're going to turn it into a service. Anyway, but I don't think that this analyst, so I said by 2026, we'll have all of this. And then I said, here's how you can look at the value. Here's what the numbers that it's going to create when it becomes this, when Optimus and RoboTaxi becomes a thing. Here's what's going to happen. I don't think these analysts did that. I think they said, I think these eventually are going to be solved. And we'll pick a date. 2030 is a round number. and it's going to be a lot of money. It's going to be worth a lot of money. They're going to do really, really well. This is going to create some money. I don't think they did the numbers. I really don't think they did the numbers. Yes. So, but it's a hugely positive fact that they named these 3 huge businesses and they think that they'll all get there, even if it's only by 2030. A wise investor could easily think it will be sooner. I do. You probably do. I think that, as you know, Optimus will be for sale or rent next year. And even wiser investor says, I plan to hold until then anyway, even to 2030. So if they're going to be successful sometime between now and 2030, I'm going to be rich. That's all there is to it. So they said that they give RoboTaxi, Optimus, Dojo 40% of the current discounted valuation, meaning they believe that car, energy, and the services business is only worth $300 billion now, discounted from 2030 based on their expectations. I would love to see that analysis. I would really like to see how they get there. That means they think that all of the other stuff is worth $100. I mean, $100 a share. Anyway, now that's in their base case. We will talk in a minute. Anyway, the headline on this story should have been Optimus bot and RoboTaxis coming in 2030. That would have been a great headline. The stock wouldn't have been down right now. I'm telling you, if they buried the other part, and that was the headline. Anyway, so the wheat, all will happen. The chaff, 2030, and no current value, no real current value, no realistic based on, I mean, again, I haven't seen the full letter. Maybe this is a 20-page letter and they really get into some nuts and bolts about what RoboTaxi is going to do and what Optimus is going to do and what Dojo is going to do. And they discount that and they look at it and they go, yeah, the best we can do is 200 billion right now. Okay. Number two, as for Musk, this is now, remember, these are in the order of importance. That is the most important thing that came out of this letter. It should have been the headline. Number two, as for Musk, they said, having a charismatic and convincing CEO supports the hope element of Tesla's valuation. His global fame has afforded the company a customer awareness that far outweighs money spent in marketing and advertising, which they called a tangible benefit. Sounds great to me. No kidding. I laughed out loud in an empty room. There are those who think his fame is tainted by his views, and there are legions who hate him and more legions who love him. But love him or hate him, if the product improves my life, I gotta buy it. I am no fan of Amazon or YouTube and their opinions and beliefs, but I not only use their products, I make most of my living from their services. So while I doubt that there are many investors or traders who don't know that Elon Musk is a massive personality who is now a world leader and whose voice moves mountains, that's a bad analogy. No, he's not. Anyway, he moves stuff. Okay. Anyway, it could be, the headline could have been, Elon Musk fame is rightfully a huge driver of the huge PE on Tesla. That could have been the headline. I do believe, however, this is a good argument for upping the advertising so actual demand is being driven by more than Elon and word of mouth. All right, on this one, the wheat was Elon drives sales. The chaff, only calling it a tangible benefit? Oh my goodness, is that an understatement of the truth? All right, number three. He gives it a $160 base case valuation. Maybe there's a more complete copy of this analysis somewhere with numbers and stuff. I've looked everywhere. So the good news is that they're not suggesting, as some bears, that the stock should be valued like an auto company with low margins, high debt, etc. That's what the normal car company, low margins, high debt. They do get that the company is more than an auto company. That's a very good thing. I can only assume that this valuation difference is the PE. So they must be giving a PE of about 40. And that might be somewhat fair given the third quarter miss, but I think it really fails the test if we can't see even the 2024 estimated earnings that they're going by. And none of the articles are showing this. So the wheat on this one, the stock is currently worth $160. The chaff, show me the analysis. Number four, the caution. They say the caution stems from the uncertainty around the timing and commercialization of Tesla's varied ideas. The HSBC analyst said, we see considerable potential in Tesla's products and prospects and ideas, but we think the timeline is likely to be much longer than the market and the valuation reflect. We think, however, that the expected cost of capital for these businesses should be well above Tesla's average, given the regulatory and technological challenges that they face. Now, has this guy paid attention to Tesla's use of capital? They're at the top of the charts on return on invested capital. And even if they have to spend more than the current budgeted amounts to develop these products, even a doubling of what they're spending now, it would not be significant, not come close to significance in terms of the potential future cash flows from those businesses. These are the largest businesses ever contemplated by man. FSD combined with RoboTaxi is the largest business that has ever been created by itself. And Optimus, it's multiple times bigger than that. So it doesn't matter how much capital they have to spend. It really doesn't. So maybe the analysis of what the cash flow is going to be on these businesses in 2030 is the problem. But again, haven't seen those. All right. So the company has high tech that will generate trillions. You agree that they will eventually get this done, but you want to value the entire company at 500 billion and the potential future lines of business at 200 billion of that 500 billion. The company is spending $9 billion a year on CapEx now and still generating huge free cash flow. And the company is growing revenues, profits, and free cash flow at the fastest pace of any company this size ever. But there is concern over the timing of these future products and the cost to bring them to market. So basically, you're going to value them at 200 billion. The headline should have been Tesla AI business worth 200 billion right now. Well, that's a lousy headline, but you get the point. The wheat, giving clear guidance on current value of Tesla's AI business. Very few people do that. The chaff, the value is crazy low, and the value for the car, truck, energy, services business, stupid low. 5, the analysis never mentions energy. Not in any article I've been able to find. Maybe again, there's a 20-page paper that we haven't seen. It doesn't mention services such as insurance or supercharger stations. Maybe there's a detailed analysis somewhere, but it's pretty easy to see energy alone throwing off $4 billion in profits next year. With the growth at 100% per year, that would suggest the energy division alone could be valued at 100 billion just based on 2024, not based on what he says he's doing, taking 2030 and coming up to a now value. But if you take the growth rate of the energy business and you do any kind of analysis and you take anything that Elon said for true, he's talking about a terabyte in 2030. So the value of the energy business today on a discounted basis is probably the entire value of the entire company right now at 209 or whatever it's sitting at right this second. Anyway, the headline should have been HSBC sees no value in Tesla's energy division or their charging stations. That should have been that. Now that might have really caused people to read the article. The wheat, there's none. SIP, 0. The chaff, obvious. Okay. Number 6, HSB views Tesla differently than conventional car makers. Well, good. Because it has already become a cost leader in the EV space, and with its growth ambitions, it will likely remain the leader for some time. Yes, the cost leader in that it can already create a car way more valuable for less money than any other car company out there. And they're just getting better and better every day. Okay. Okay, so let's see. Its growth ambitions, it will likely remain the leader for some time. While its growth aspirations of 20 million units produced by 2030 are lofty, he's questioning the credibility. He says, Tyndall wrote, questioning Tesla's credibility is problematic. So he agrees. For him to question Tesla's credibility is problematic because it has generally done what it promises. Eventually, Tyndall does say that the 20 million looks too optimistic at this point. However, why? You just got through saying never bet against Elon, and now you're saying you should bet against Elon. If it's half of that, if it's 10 million cars a year, and you do the valuation of that business all by itself in 2030 and and then bring it back to current valuation, you will have more than the price that you're suggesting that the entire company's worth, and you're saying it's only 60% of it. Headline, Tesla is leader in BEV and will be for some time. Or maybe headline, Elon generally does what he promises eventually. Wheat, Tesla does what it promises in auto production. Chaff, but we think they won't in the future. 7. Musk and other issues aside, Tyndall and the HSBC team have also modeled a bull case scenario for Tesla with a 280 price target. Tyndall wrote, upside risks include faster than expected upside. In other words, these are the things that could drive it to 280 instead of his 152 or whatever it was. Include faster than expected EV transition globally, continued market share growth for Tesla, and favorable regulatory environment for products like FSD. Okay, the headline could have been HSB has bull price target of 280. And maybe the stock would not have gone down a dime. The only requirements he has are for faster than expected EV transition. But what does he expect? What does that even mean? What is faster than, what does he expect for next year and the following year? What does he think Tesla's going to do? Then he wants market share growth. That isn't going to happen when you're the market leader, but maybe he's talking about market share growth compared to the entire vehicle market, growing EV business compared to ICE, but he doesn't say that. And if he does in the full letter, we don't know that. And none of the articles stated that. So in fairness, maybe there's an article that has some of these answers. So the wheat on this one, there's a bull case at 280. The headline should have been, I already gave it to you. And then the chaff buried the lead, and it doesn't appear in 9 out of the 10 articles I found. Only the base case appears in 9 out, in Yahoo, in Barron's, I go down the list of all the articles I read. One of them mentions the 280 bull case. Number 8. Oh, see, there's a bonus. I said 7. There's actually 8. Leaving aside the current legal issues Elon Musk faces, we think his prominence presents a considerable single-man risk at the group, meaning the Tesla group. Yeah, okay. Tesla has recently made efforts, he says, to portray the company as one beyond just Elon Musk, parading out a slew of executives at its investor day in March and offering up more execs beyond Musk and former CFO Zachary Kirkhorn to speak up during his earnings conference calls. All right. There is absolutely no reason that Elon leaving for any reason, including being called back to his home planet, would be a huge blow to the company on a proportion like that of Steve Jobs, maybe even more significant than losing Steve Jobs. Having said that, he's only 52 years old. He's apparently in great health. He has no apparent interest in leaving, and therefore I would count this risk as low. So the wheat on this one, yeah, it is a risk worth a few points on anybody's analysis. Chaff, such a low likelihood. Headline, higher value for Tesla if line of succession was clear. Right? Get a really, really good VP in there. Get a really, really good CEO, CFO. Well, you got a new CFO. Make the line of succession more clear. Well, my hope is that others who have some sense are reading the articles and seeing what I'm reading. A bearish evaluation of the current business and one of the first bears to give value to the future business. A very unique view, to be sure. What do you think? All right, so this is the time. If you thought this was any good at all, to hit the like button. This is if you didn't already do it up above. You can't undo it or do it again. Anyway, only do it once, because if you hit it the second time, it goes away. And then, of course, you want to hit subscribe. I'm absolutely flabbergasted why you haven't hit subscribe yet. And then hit notify so that you're reminded of tonight's show. And I will probably do a little previewing of the Elon Musk, Lex Fridman discussion tomorrow morning show, where I may preview it again. And then tomorrow afternoon, I will do a full-on presentation about what they discussed. And then tomorrow evening, we have Larry Goldberg. All right. We want to always ask that you spend $25. You want this? Come on, your friends will think this is the coolest thing they've ever seen. It is the same thickness as, it's a 3mm thickness. It's a solid piece of stainless steel, like the Cybertruck. It's only $25, and it'll open your beer or your bottled water. I mean, it's very, very cool. It comes in camo as well, right over here. 25 for one, 45 for two, etc. And all that information is down below. So buy your Cybertruck. Let's get going. Come on now. I'm looking forward to you guys helping to support the channel with that. But I'm even more interested. I think you're going to like it. Everybody that gets it is like really impressed. I get all these letters from folks talking about how much they like it and then saying, I'm going to buy some more for my friends and my coworkers and everybody else. And also, I do need one for my plane. A lot of you guys, that's what you... Let me know down below in the comments if you got one for your plane yet. All right, I think that's all there is to say about this for this time. I did think that article was amazing in so many ways. And it's amazing how the mainstream media doesn't give it the headline it deserved. It's been Randy Kirk. I really enjoyed talking.